Hello everyone, welcome to Smart Investing. My name is Albert and today's video is going to be about the banking services sector, also known as the bank stocks. I'm only going to go over 3 stocks with you guys. So that's all I'm going to do for you guys for today. Today is November 19th, 2023, Sunday. It is 10:35 p.m. And these are the stocks that I have for you. So I have ticker symbol KEY, ticker symbol TBBK, and ticker symbol ATLC. So for the first stock that I have, it is at $12.32. So that is ticker symbol KEY, also known as Key Corp. Looking at the high and low for the 52 weeks. Difference of 10, that checks out. Dividend and then the earnings. This is pretty high. That is pretty high. So the earnings really don't support this. So let me paint that picture. So these earnings do not support this dividend. I mean, it does, but just barely. So I don't really think this is good for an income portfolio at all. Maybe for momentum, day trading and stuff. We have a volume of 15 million, market cap of about 11.5. The value for this seems okay. Has some undervalue to it. So meaning you're getting this company, if you decide to, it is at a good price. So this is the technicals. We have this chart here. So what I'm looking at is the high of 2020 and the low. So we have here about, I don't know, 17 bucks. So the next drop that was actually taking place was actually this year. This was in March, mid-March. I can't remember the exact date. So from what I'm seeing here is around March 10th. And so it dropped tremendously. So I'm not looking at the percentage. I'm going off of the exact amounts. So we're talking about some 17 for that first drop all the way down to about, I don't know, 11.50. $6 move. It doesn't seem like much, but when you actually chart it down, we're talking about let me see. So from 11, at least halfway, went down from about, and I'm just talking about the drop itself, not in total, because if it was the high for the year, the high would have been actually closer to 19. And then the low for this year was actually close to 9. So that's almost a $10 drop, more or less, just by looking at it. So now we're stuck in this range here. So we see, go back to 2020. The high for 2020 to break out of this range, back in 2020 for that second quarter, it took about, I don't know, 6 months to break out of that, the new high. So this was actual confirmation back in around November, which was pretty much closing out the year, for it to go to new highs. And I don't mean breaking the 2020 highs, just getting out of this funk here, because it was on a slow trend up, but things could have just turned very, very sour and gone back down again. So now we're in the same predicament. For this chart, it looks like from the 2020. So right here we have it at about 12 and change. And right here you can see it didn't break out there. It didn't break out slightly, but it still didn't really make another major move up. And now the third time here, and it's failing. So even if it does break out, we're closing this out to the year. And again, I'm not really bullish on bank stocks. I think they're going to perform pretty bad next year. So with this whole fiasco that happened this year, I don't see how banks are going to do well. I mean, overall. You have the big ones like JP Morgan and Bank of America. They'll do fine, but it's the smaller banks like they've been saying for months and months now. Those are the ones that are going to struggle, and I do agree. Looking at the analyst ratings we have here, more than 50%, so we're talking at about close to 60. And then they are rating this a buy at about 60%. To be exact, it's 59, but why not? Round it up to 60. Quant rating. So, quant rating, income. I do not like this company for an income portfolio. Quality, I'm not sure about. That's supposed to be a question mark. Value, I do agree with the value. You can have good value off of this. Growth, I'm not sure. Only maybe through buying and selling, day trading. If it can boost up the share price. So I don't see no growth in the company. I see that more as a fundamental thing. Quality, I don't know the quality of this company. To each their own. I'm not a customer, so I wouldn't know. So anyhow, overall rating he gives a 2 out of a 5. So a 2 out of a 5 for this company. I would give it a 3 out of 5. So we're gonna dig into the fundamentals and then move on from this one. So we have only out of the last 4 results, it has only beaten estimates 1 time out of 4. So I like to see at least 50-50 or more. And again, it's only giving me these last quarters. I can't see anything beforehand. I can't see anything from 2021 or 2020 if they beat results or not. I'm sure that can be found in other sites and sources, so it shouldn't be too much of a problem. Key indicators, I like to look at the annual. So we have here let's look at some earnings. So they dropped a little bit from 2.6 to close to 2. So we're talking about at least 600 million. Net margins, they have dropped tremendously from 36% all the way to 26%. That is a 10% loss. Looked at the consistency on this with the net margins, and it just looked a little weird, up and down, up and down. I mean, this was an up year, then it started going down, 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 and then it went up. And then now, the numbers just look a little bit weird. 92% debt. So net income we have here at about 1.91, revenue 7.25. 7.25. So cash flow. So they're pretty much breaking even on the cash flow, and they will have to use their net income just to, I guess, cover the dividends, obviously, but they can't make any future mistakes or any future investments because, again, the cash flow for this company and stock, it just doesn't look too good. So let's end this with a final decision. Would I add this to my watch list or recommend it? I can't recommend anything, but I can recommend you to watch my channel. But as a final selection, again, this is just based on my decision only. You can do that for yourself. So again, I'm just throwing out a disclaimer. I'm not licensed or insured. So if you're going to invest in the stock market, please see someone who's registered, licensed, and insured because you don't want them to run away with your money. So anyhow, alongside that, you just want to, do the right thing and get your money's worth. That's pretty much the name of the game. So I really don't see. I don't see it. I just don't see it. I don't see this company uh, doing better than they were year to year. You know what I mean? Just explosive growth. Uh, and that would be it. So, would a final decision on my end? Would I add this to a watch list? I'd say no to the watch list, and move on to the next one. So we have the next one is TBBK. So looking at the first page, close to $40. This does not pay a dividend. Very, very surprising. But their earnings are okay. It's a $1 billion company, so very understandable. Profit. So earnings, price to earnings, sorry. So 11.6. Slightly undervalued, slightly. So we have 2020 highs. It almost reached the 2020 highs in 2022, but then we have this nonsense here. And it just jumped right back up, like as if the world doesn't exist. And so we're gonna look at the analysis. 100% buy based on 3 analysts. I'm shocked, to be honest. So we have here is that a negative number? Yeah, it looks like I could be wrong. So overall rating was a 6.73. And then we have no income for that. And then momentum, I can't believe it if it's like that. Quality, I'm not sure about. That's something I have to look into. The value, that's a little too low. I consider it maybe like a 5. Like a 5. And again, the growth, I don't see any growth. We're going to look at the company and the fundamentals real quick. So it has beaten estimates. Let me see, 1, 2, 3 times out of the 4 is beaten estimates. Margins. So we went from same thing, pretty much same thing. Not much of a difference. The debt is at 91%. So now we want to look at the net income. Nothing. It's gotta be something. Apologize. I just want to see something. If not, that's okay. So moving on from that. So I said TBBK. So yeah, moving on from that. Would I add this to a watch list? Yes or no? Overall, my decisions, I would have to say no. Balance sheet at 91%. Cash flow. Again, this cash flow for this stock. They seem okay. Would I add this to the watch list? Needs a little bit of work just because they're not paying a dividend. I think this is a company I like to review. Also, again, not in the nearby future, but sometime in the future, because things change, and then it makes it seem like hard to describe, like as if he's just in, like somebody's in the business, but um, yeah, their margins are weird. These are big fluctuations because the company's so small, so you're gonna notice it and see it. So again, would I add this to the watch list? I would say no. Needs a little bit of work, just a little bit of work. Again, I like to see a little bit more cash flow, and if they don't decide to pay a dividend, then at least try to do some share buybacks or something. Last one up is ticker symbol ATLC. So market cap at 450. Dividend is not paying. Earnings are pretty strong at 4.10. Then we have the PE ratio, very undervalued. That is half the price of. It's telling me that's half the price of what I would normally pay. 52-week high and low, difference of $10. Yes, it is. Yes, there is. Volume needs to pick up, pretty low. So other than that, 5-year trend, it looks okay. It's okay. It still looks like it's in fight mode. I wouldn't be surprised if we get another rally going into the next year because everybody's happy. People on vacation, even the Fed, they don't give a crap. They're just gonna let it ride and press the automatic button and set sail and say, "See you next year." Well, other than that, we have people like me that look for solid research and like to read and learn and all that about the markets because the markets are always changing day to day. So this was a big move. I think from 2023 all the way to August. That was a really big move. I don't think people realize that, but that pretty much is a big move when you're actively trading, obviously. So then we have that mountain and a slide going back down, and then I don't know if it's going to go up again or not, but people seem to like it. People seem to like it. I think it's going in this range between here, 30 all the way to 21. So that's a $9 difference for the range that I'm seeing. Moving on to the analysis. So we have 50% buy, 25% strong buy, so 75%. We have here in Q4, whoops, I was trying to look at it. So Q4, they missed and they beat, and then beat. So 3 out of 4 ain't bad. Key indicators we have here. Net margins have dropped tremendously from 20. I just saw it too. So anyways, from 33% to 28%. Looking at least about 5-year uh, 5-year implementing this system that looks like it's being neglected. Went down, then that's pretty much what I have for you guys. So let me see something with that. No, the last time they paid a dividend was in 2009. So looking at this stock, would I add this to the watch list? I'm gonna say no as well, but it needs work, just a little bit of work. Just a little bit of work. So let's see. Those are the stocks that I have for you guys. So again, I can't recommend any companies. And you guys who are watching, listening, thank you again for watching, supporting the channel. At the end of the month, the next video that I will be sending out will be, again, special dividends for the whole month of November. I usually try to do 2 videos. One for week 1 and week 2, put it into one video, and then for week 3 and 4, I like to put that in a separate video, just so I won't, stay behind with my list. So again, thank you guys for watching. I'll see you guys in the next one, and I'm almost done with the banking services sector list. So I'll see you guys soon.